right now on the market, we're seeing even quality properties taking a month, 2 months to sell. So I can almost guarantee you those properties that look like shit, they need a complete makeover. The kitchen looks ugly. It looks like it's from the 90s. I can almost guarantee they're getting little to no offers or activity. There's immense opportunity right there. Welcome to the Real Estate Podcast. We're on episode 349, and we're going to be talking about our top 3 investment ideas in real estate and in the stock market. Both me and Ariel give our top 3, and you're going to want to hear this one. So check it out.
Welcome to the Real Estate Podcast, your go-to source for raw, unfiltered stories and expert tips. Whether you're a buyer, seller, tenant, landlord, or realtor, join us as we dive into the world of real estate.
Welcome to the world of real estate, Shehri Shahzad.
I'm back.
I'm back, he says. Nice to have you back. And today we are going to talk a little bit of real estate. We're also going to talk a little bit of investing in the stock market.
One of my favorite topics.
Yeah.
That's what I'm here for.
Yeah. Well, I think out of the whole team, obviously you are the one everybody turns to for stock discussion.
Yeah, for better or worse.
For better or worse.
Yeah.
But you and I are the ones that are most invested, not necessarily financially, but in terms of just staying abreast of what's happening in the market and what stocks are doing. So we're going to talk a little stock market. We're going to talk a little bit of real estate, but we're going to tie it all into investing today. That's what we're talking about, investing. Before we get into it, how's things? How's summer treating you? How are you doing?
I'm great. I got my linen shirt on.
Yeah.
It's all I've been wearing this summer.
Yeah.
Because this is one of the hottest summers I feel like we've had in a while.
Yeah. Do you find though that it's really hard to keep the linen shirt wrinkle free?
100%. You can already, I probably worn this once since I washed it and steamed it.
Yeah.
And it's already on my driveway, on my drive here, it's already fully wrinkled. Yeah. But I feel like that's the look of a linen shirt. People understand.
Yeah.
So it's not too bad. I like it.
Yeah, you look good.
Thanks,
you look
man.
good.
Yeah.
You're taking up golf.
Yep. I've been going to the range here or there, trying to fix my form up a bit because I can hit it far. I can hit 200, but if it's not with the right form, which is obviously the most important thing in golf. So that's what I really gotta hone on.
Well, I think what a lot of people, like I've been golfing for the past 20 odd years, and I was golfing with Steve Bruman yesterday, and I think it's great to see people going out to the range and getting started that way. That's the best way to practice and get familiar. But it's so different when you're out at the course, right?
Yeah.
Once you're there, everything changes. Every hole is different. So we'll have to force you to come out for a game.
I'd love to do that.
All right, so let's get into today's topics, and I'm just going to throw it out at you and wait for your response.
Mm-hmm.
Let's start with the real estate side of things. So we're going to give everybody your top 3 investment opportunities in real estate as of right now, July 2025. And I'll do mine.
Cool.
So
sounds like a plan.
Let's hit it. Let's go.
All right. Well, if you've been on my Instagram, you already know what my first one's going to be, and that's condos, specifically in downtown Toronto right now. It's funny because I just closed on a deal yesterday for a buddy of mine who I just helped buy a condo downtown, and it was exactly how I thought it would go. He got a studio in downtown with parking at Bay and College, which is one of the best locations you can get, for close to 400, for just over 400. So whether you're investing or buying for yourself, I ran the numbers on it. It's like $1,900 a month for your mortgage, another $300 to $400 for maintenance. So that's around $23 for that condo. And if you rented it out for around $2,000 and then rented the parking out separately for another $200, you're already kind of breaking even on that. So I think condos downtown right now are my top investment idea in real estate. Obviously, that's the prime location to get a condo in the GTA. And for those prices, it's...
Well, especially in Toronto, when you talk downtown Toronto, the inventory is so plentiful right now that there's a lot of desperate sellers. A lot of those are investors that need to liquidate, we'll say.
Yep.
When you talk about the numbers, obviously you've got your mortgage, your taxes, your maintenance. I think people, especially if they are buying that type of condo with the intent of renting it out, that they should build in a vacancy period into their cost structure, because they're not renting out as fast as they were either, because there's a lot of rental inventory. Yep. So what happens if you have to carry 2 months of vacant rent? Now you've got that additional expense, which you should prorate over, the next 12 months or so. But also what a lot of people don't realize is any net loss is a reduction on your personal income.
Yep.
So hypothetically speaking, if your cost to carry that property, including all of your expenses, maintenance, repairs, it's another factor that you need to consider. Although with condos, you don't have a lot of repairs necessarily.
Yep.
But let's just say hypothetically your cost is $3,000 a month. You're renting it for $2,500 a month, and now you're at a cash flow loss every month of $500. That's $6,000 per year. You take that $6,000 and apply that loss to your personal income. If you're in a higher tax bracket and you're paying 45 to 53% taxes, well, your net loss now is really only half, right?
Exactly. Yep.
So then you factor in, okay, so now my loss, instead of $6,000 a month, my net loss is really $3,000 or $6,000 a year. My net loss really is $3,000 for the year. And what is the appreciation of the property? So, conservatively, could you say over the next 10 years that property will appreciate 4% per year?
Yep.
Probably. And how much is my mortgage being paid down during that period?
Yeah.
So you look at those numbers, you sit and hold it for 5 to 10 years, and that gives you a pretty good return on your investment. If you can 100%. Buy something like that for $400,000, 20% down plus your land transfer tax and all that, you're $100,000 into it.
Yep.
So if you look at the return on that $100,000 over the next 5 to 10 years, that's getting your money to work for you.
100%.
Right?
And then I even looked into how much equity he would be making in the first 5 years. So for the first year, it's around $10,000 already. So if you're renting that out, you're already recouping some of that initial investment. The second year, it's 15. The third year, it's even more.
Yeah.
Obviously, the more you pay down the mortgage, the higher your equity is going to be over the next couple of years. So that's something a lot of people forget about too. Everyone's focused on the capital appreciation, but you're literally having someone else pay off your mortgage and your equity, right? So,
yep. All right. Real estate investment number 2.
Number 2 right now, and I actually just read an article in the Star about this. The number of power of sale or distress sales is almost double.
That's a good one.
Yeah, it's almost double now. And those can be a little bit harder to find, but if you got the right help and the right network, and you've got connections to banks like a lot of realtors do, you can get, first dibs on a lot of those before they even hit the market.
Yeah, or at least a heads up.
Exactly, right? You see them on MLS too, or on realtor.ca. They might throw it in the description, so maybe you can run a keyword search. That's a huge one right now. Obviously, those sales happen quick, and they happen typically cheaper than the going market for that house.
Yeah, I've seen it where the banks do, or I'll say the lender, not banks necessarily, because it could be a different type of institution, but sometimes they hold out, and they usually do that when the market is appreciating. But right now, because there's, uncertainty in the market, the lenders are taking whatever they can get.
Yep.
So sometimes, if they can only get X and it's below its market value, they still take it because they got to get it off the books.
Yep. And they have no idea which way the market's going in this market, right?
Exactly.
I mean, like a couple of years ago, you could have forecasted with some pretty good likelihood that the market's still trending up.
Yeah.
But now with the tariffs, all the uncertainty, you have no idea where it's going. So.
The key for people putting offers in, though, on a power of sale, a foreclosure, and tie all of that stuff in together, is the lender will almost always need an extended period of time to review that offer. So they're asking for an irrevocable time of maybe 72 hours.
Mm-hmm.
So that means you're now tied up into that offer for 3 days without knowing if you're getting it or not.
Yep.
The other thing is you really should be prepared properly to present an offer. Your best chance is going in without any conditions.
Exactly.
So try and do a home inspection before your offer. Most of the time they will allow it. So a lot of home inspectors do what they call a pre-purchase inspection. So it's not a full-blown inspection. It's about half of an inspection, and they charge about half. But they will pop up into the attic, see if there's any issues, check foundation, check all of the major components, not the nitty-gritty little receptacle is broken and kind of stuff. And then obviously make sure that you're financially qualified and try and go in with a firm offer.
Yeah, exactly.
And a quick closing date always helps.
Yeah, especially because they don't want that property sitting vacant for months. So if you can't close for a couple months, you're going to lose out to someone who can close in 30 days, right? So,
all right, number 3?
Number 3 is house flippers. Mm-hmm. So right now on the market, we're seeing even quality properties taking a month, 2 months to sell. So I can almost guarantee you those properties that look like shit, they need a complete makeover. The kitchen looks ugly. It looks like it's from the 90s. I can almost guarantee they're getting little to no offers or activity. That's where house flippers can come in. You obviously need a network of contractors that can do it for you, not as expensive as if you were to call a random contractor. So you need that network, or maybe you're a handyman yourself, a little more advanced than a handyman, but maybe you know how to do that yourself. There's immense opportunity right there.
Here's the problem that I find, though, with quote unquote flippers, I'm not bundling them all together, and I'm not going to generalize that much, but I see some people trying to flip a home and they do it wrong. They overspend on a property that doesn't need to be overspent on. So they're putting, I'll give you an example, really, really luxurious tile in a home that you could get away with just a basic tile.
Mm-hmm.
So you have to match the reno with the home, with the area, with the desirability, and kind of reverse engineer your ideal buyer for that. And that requires just talk to a good realtor that does a lot of business in the area to know who would that target demographic be once that home is complete. How much would the property be worth on the market today? And make sure you're not cutting any corners in terms of craftsmanship.
Yep.
Make sure you're not cheaping out on stuff. So it's that fine balance. You don't want to overspend because you're not going to get a return, especially if you're overspending in the wrong areas. You don't want to underspend because then it's going to look like you cheaped out. And you don't want a shortcut. So it's got to be done really well. When Adrian and I flipped our townhouse, we made sure we spent money in the right areas. What were the right areas? Well, we swapped out the carpeted stairs and turned them into a really nice hardwood staircase, modernized it, ripped out all of the flooring, and put in a nice Torley's luxury laminate, which had a cork underlay. So they'll stand the test of time. They're waterproof. They're mold and mildew resistant, and look really sharp. But then we didn't spend a whole lot of money on lighting, as an example. We did upgrade all the lighting, but we did it on not on the cheap, but Amazon stuff, right? Paint is always a great return on the investment. Countertops, again, you don't want to go too lavish, but new countertops. And so there are ways to do it. So I like the option of finding something, to your point, finding something that needs the TLC, but specifically looking for ones that have the good bones in a good location. Yeah. If you pick the right location and you know what the target demographic is after, then you can tweak the rest, right?
Exactly. Well, it's like the saying, right? You want to buy a crappy house in an amazing area, not an amazing house in a crappy area. Right. Yep. And that's the one you want to flip. So.
All right. I'll give you my top 3.
Let's hear it.
So, and, when I talk about this, I put my purchaser hat on. So it's really just me talking about what I would do with my money if I was in the market to invest in real estate at this moment. So number 1 would be Waterfront Cottages. And you and I are going to chat about that in the next episode. Yep. So maybe I'll dive more into that next week. But Waterfront Cottages, in my opinion, are going to see a surge again of interest. That we're already seeing it because, waterfront is very limited. I think people are spending less money on investing in real estate in the US now and refocusing on spending time in Canada. We're seeing the statistics of flights and border activity. A lot of Canadians staying in Canada, keeping their money in Canada, not driving south. So I think the demand for rental properties in Northern Ontario, we'll say, are increasing, will continue to increase. And I think just the general demand is going to be there. The key is you got to find a good waterfront. And we'll talk about the rest of it next week.
Exactly.
But that's my number 1 right now is I'd be looking to purchase, and I own one, and I'm still actively looking at what opportunities are out there because I think there's a lot of good deals. The market was quiet. Now it's picking up a little bit again, but there are a lot of deals out there. Number 2, and I'm going to go a little bit off the board here, and it's a little bit more of a long-term investment. But we are seeing the activity kind of pull back into the GTA market. So, and I'll explain what I mean. During COVID, people were pushing out of the GTA.
Yep.
Right? Work from home, blah, blah, blah. So they're going out to places I've never even heard of.
4 hours out.
Yeah, or even an hour out, but in the middle of, nowhere. And now a lot of companies are asking their employees to come back to the office, if not Monday to Friday or full time, at least 2, 3, 4 days a week.
Yep.
The prices have come down in the last 2 years in the GTA, so it's making it a bit more affordable. So we're actually seeing people now not looking in the areas that they were looking at 3, 4, 5 years ago.
Yep.
So I'm not going to give a specific location because there isn't really much to talk about in terms of one specific location. But I would say anything outside of the GTA by about 45 minutes to an hour, as close as you can get to a major highway. So 401 or 407. And so you think of a place like Woodstock as an example, or the surrounding areas. I mentioned Woodstock years ago. anything that's close to the goal line.
Yep.
Obviously, that's going to be attractive. But basically, I would look at any real estate as an investment that's about an hour outside of the GTA, as close as possible to the 401 and 407, and something that will rent out easily.
Yep.
So what is that? Well, that depends on your budget, and that depends on location preference, whatever, and your hold period. So if you say, Ariel, I want to hold for 10 years, and I want to rent it out on a monthly basis, I'll say, let's get as close as possible to the 401, and let's focus on a young family or a small family. So, you start down, and I would look at even Cambridge, great option to find something around $600,000.
Yep.
And it rents real easy. It's easy to commute from. So that's my number 2.
Okay. Well, to add to that, sorry, before you go, I was going to say Waterloo is a great place too.
Mm-hmm.
Because I find anywhere, first of all, like you said, near the 401, and then you're near a university,
Yep.
Those are very easy to rent out to students. And I know because I used to live down there.
Yep.
And the prices are super attractive. Like you'll be cash flowing
for sure
every single month.
Yeah.
So wanted to add that to your.
Yeah. And a lot of people say, oh, I don't want to rent to students. Oftentimes students have their parents co-sign.
Mm-hmm.
Oftentimes you can get rent money up front. And for the most part, students are pretty respectful. So you just have to do your due diligence.
The trick is find out what degree they're in.
Yeah, well, I don't know. I don't know about that, but you're talking to high school dropouts, so I don't know anything about university. And then number 3 is, I'll call it joint venture.
Okay.
Partner up right now with people that want to invest in real estate that you trust and purchase multiple properties. So we know it's a good time to buy. It's a quote unquote buyer's market, right? Mm-hmm. So instead of putting all your eggs in one basket, diversify your real estate portfolio, partner up with a brother, cousin, a best friend, a colleague, whatever, and purchase 2 or 3 properties.
Okay. So you're saying instead of necessarily going out and even buying multiple, but splitting your money up for the down payment, you actually pool all your resources together, maybe into a fund or something, because I know you can actually incorporate or whatever as a joint venture.
Yeah.
Pool those funds together and then you allocate them to different ends in real estate.
Correct.
Yeah. Okay.
Yep. And that generates multiple streams of income, multiple streams of expenses outwards. So you have more places to move money around in and out. And it gives the key for me there, Shehri, is in 5 years, can you now go and refinance 2 or 3 properties much more efficiently to buy your 4th or 5th or 4th and 5th versus just having 1 unit? And the answer is yes.
Yeah.
So it gives you more leverage when you want to build an empire of real estate versus just having 1 rental property.
Exactly.
And that's the key to generational wealth. If you can start with multiple properties and just keep adding on to that, like you listen to Grant Cardone, who owns thousands of rental properties, that's really how he started, right?
Exactly. And I love the idea of the joint venture because then you're not really focused on a single property. You're focused on the return of your entire fund or however you're tracking it.
Yep.
And it's very easy to allocate amongst different people, and it's really easy to come together and do that. So I like that idea.
And lenders like it because there's more.
There's multiple people on the hook, right?
Yeah, there's more diversification in terms of making sure that they are going to get paid in one way or another, right?
Yep, exactly.
So there's more leverage that way.
Yep.
So that's my third. All right.
Nice. Okay.
Great real estate investment tips. We're going to shift to stocks. We're going to blaze through this a little bit. But if you guys have any questions, comments, you want to chat more about one of these top three that Shehri and I have, they're both very different, which I'm surprised because we didn't share notes.
No.
All right, let's talk about the good stuff. So if you're not buying real estate right now, or even if you are, but if you like to play in the stock market a little bit, we want to hear your stock tips, but let's go through ours. So if you're buying some stocks right now, what are your top three and why?
My favorite stock of all time has always been CrowdStrike.
Mm-hmm.
And I'll tell you why. They're the leader in cybersecurity. And I love stocks and investments that just make sense with the current like market backdrop. Right now, everything's going online. You got AI, you got scams going on everywhere. And the more we go online, the more susceptible we are to those scams, to hackers, to getting our personal information stolen.
Yep.
Right? Nowadays, you don't even know what your password is for a website anymore. The website stores it for you and creates it.
Right.
CrowdStrike is in an amazing place where they're seen as a market leader. Their customers are like Microsoft, for example, and they're growing 20 to 30%. And they've been around for, I want to say 15 years now. So to continue to grow at that pace is amazing. If you look at their stock chart, it's just straight up all the time. So any kind of dip on CrowdStrike, I always buy up. 20 to 30% dips on that stock are pretty common. So that's my number one go-to, always. Number two, I love the buy now, pay later space right now. The reason I love that space is because debt levels are getting higher. People are borrowing more to buy, you can finance your Mary Brown's chicken order nowadays, right? You literally finance everything. And guess who's behind that? It's companies like Affirm. They do buy now, pay later. It's companies like Upstart. Upstart's a bit more consumer finance loans, but they're all in the same basket. And now Klarna, which is a huge one that you see like all over Aritzia, wherever you're buying clothes, Klarna is there financing your order. And I think we're not at the place where people are going to start defaulting at the loans yet. We're still in the place where people are going to keep inflating their debt.
Yeah.
And I think that's where those companies are going to really benefit.
Yeah, I think even in the United States, it's more prevalent for that. And making payments is just very commonplace.
Yeah, exactly. Number three is gold. And I know this one's been around forever. And I personally had a time when I was like, there's no way gold can keep going. And then it broke 3,500 per ounce or something, which is insane because gold doesn't typically move with the stock market or other markets. It's supposed to be the counter-cyclical kind of metal that you go towards, right? It's like a store of value, but it's been moving with the stock market. And the reason for that is there's so much uncertainty out there that gold is the thing that people are going to flock to every single time, even though the stock market's also ripping. So those are my top three. They're also very different industries, and the gold really shakes up your portfolio. So that's why I really like those three picks.
Well, I'm a big fan of silver.
Yep. Similar idea. For
the same reason as just a cheaper investment. Those are all three very good tips.
Nice.
Yeah. All right.
I'll hand it off to you.
All right.
I'm excited.
Number one for me, and these are not necessarily buy it today, but keep them in your watch list. If you are buying today, make sure it's a long-term hold. So don't try and flip it and sell it in 3 months or whatever. Number one for me is Amazon. I love what they are doing with the sports end of Amazon Prime. I think they are going to grow that substantially. And I think in areas like hockey, where they're doing things with their hockey broadcasts that haven't been done before. And as the NHL specifically continues to expand in the United States and the sport continues to grow in the United States, I think Amazon Prime is going to be right there to capitalize on that. I also love what Amazon does in terms of creating habits of purchasing within their user database. So if you need something, a lot of people are defaulting to, okay, hop on Amazon and order it and it be here same day or next day or whatever.
Yep.
And people pay now for conveniences.
Oh, yeah.
People pay through the roof, and I'm one of them. You look at something as simple as paper towel. You order paper towel from Amazon, it arrives the next day, and you're paying 20% more than if you went to Walmart to buy it, or certainly if you went to Costco to buy it, but it arrives right at your door the next morning. So people pay for conveniences. Amazon does a great job of upselling you their Amazon Prime days to lure you in for certain sales. And I love how they have such a diversification of product offerings. So you can literally fill your cart with everything that you need in your household, in your office. Everything for our office, we order through Amazon, all of our supplies. So I really love Amazon stock. It's around $220 as of today per share. I would probably hold it, knowing that I believe it's going to double within the next 3 to 5 years. That's just my guesstimation. So yeah, put your money in there to make it double in 3 to 5 years. Love the Amazon stock. So that's my number one. Number two, McDonald's. I love the McDonald's stock because they are an iconic restaurant that will never, ever go away. They have systems, processes, and a brand in place that is worth money. They own a shit ton of real estate. They operate in the weirdest places that you would never expect globally.
Yeah.
But it's a good buy. Again, that's about a $200 stock. And they also pay dividends every quarter. So depending on what your investment is, if you're getting those dividends, that's a nice little bonus, and their dividends always go up. So they have a good history and track record of paying out those dividends. And again, for me, that's a longer term hold. That would probably be like that 5 to 10 year time frame. So I'm talking about taking your RRSPs into self-directed accounts and invest in some of these bigger companies. I think that's a real nice way of spreading out a bit of diversification in your portfolio. Certainly, if you would add your tips and my tips, you'd have a pretty well-rounded portfolio.
Sure, mine are a little bit riskier, but
you don't need a fund manager.
Exactly.
And then my third tip is not necessarily, I'm not going to mention a specific stock. What I'm going to do is talk about my personal investment portfolio over the past. I've been investing since I was 21. So for the past 24 years, I've been buying and selling stocks, sometimes kind of day trading stocks. I've been into penny stocks. I've done it all. And what I've learned in my time doing that is my best investments always come from my gut feelings of what is going to be the next trend. So I always try and focus on, okay, if this is happening in the world today, what companies are going to benefit if this trend continues? So to your point, you think about cybersecurity, right? You mentioned passwords, everything online and all that. Well, companies want to get more secure, but people, human beings running their own business, their personal business, their personal finances, have never really focused on their own cybersecurity. So I can see something like that being a future uptick for companies that specialize in that kind of stuff. So I agree 100% with you there. But think about pharma as an example. The health industry. Technology is changing dramatically. Like I've been researching to do an MRI, those, they're selling the packages now where you can go and have a full body scan and they give you a full report. So you can eliminate future health problems. They can detect cancer early, all of that stuff.
Puts you on vitamins if you need it, like that kind of report?
No, it's just a full body scan of what's going on in your body. And what potentially could be a red flag or, because cancer, as an example, can go undetected for many, many years until it's a problem. So there's these detection type of scans, and they give you a full report. You take that to your family doctor and analyze it and make sure that you're all good. So things like that. Now they've got the rings you can put on your fingers, the Aura ring, or there's so many knockoffs now, or I don't want to say knockoffs, competitors to them, that analyze your health, your body. You can do the one with your phone where you hold up your finger or press your finger to the camera and it'll tell you your blood pressure. There's so many advancements that we're going to see with AI specifically. So people want to invest in AI, but take it a step further. What are the companies that are going to provide AI tools for the average person that might change their life? And to me, there's things that will happen health related in AI.
That's what I was just going to say.
That if you can find those companies that have some stability and have the research, have a product that's maybe in the early stages, those are the types of things I'd be looking at. So technology, the way we operate, is going to change dramatically in the next 3, 5, 10 years. So try and get in early. Even those are going to be a little bit riskier for sure. So spread the money out amongst a few different companies, but just future thoughts of where the human race is going to be, right? Really.
Exactly. And those are the best investment ideas at the end of the day. And it's like you said, you gotta mix it in with your gut feeling, right? And that to me is super important because you want to invest in what you have confidence in. Because if you do that, then you'll stick it out. If you don't have confidence in it, if your buddy just told you like I just said, we'll go buy CrowdStrike, but you're not used to the risk in that industry or seeing those stocks pull back and you haven't done the research, you're going to be out of there as soon as it drops 10%. Whereas I'll be buying more because I know that industry and I know that stock. So the gut feel mixed with the trends of where, like you said, the human race is going, where the world is moving towards, I think that is the investment strategy. And no fund manager is going to tell you that. Right.
They're just going to take their 2.13%.
Exactly. And make you 2% a year. And
well, some great tips for how to spend your money today. Or I won't say spend, how to allocate your money. Invest. But, when we say invest, it's like saying real estate invest. Investments can go up. They can go down. It's an education on money allocation. Does that make sense? All right. And next week, we're talking Waterfront Cottages.
Yeah, we gave you a sneak peek today. But we'll get deeper into it next week.
By the way, and I'm going to just end on this because I love talking to you about stocks and the market, and we have those chats all the time. You know where I wouldn't be buying stocks right now? Anything social media related. So even if you're watching this on Instagram, I wouldn't be buying Meta stock. I wouldn't be buying anything social media related because I think there are going to be changes dramatically to the social media world in the next 3 to 5 years because of AI. And
Regulation, you're talking?
between regulation, new platforms, I think there's a lot, like, think of Facebook. How stale is Facebook right now,
Yeah.
right?
Yeah.
Even Instagram, it's getting a bit stale. TikTok, it's going good, but it's going to get stale. People are getting bored quicker, and there are more options. And so I just would be very cautious on buying any stocks that are focused specifically on social media.
Got it. Okay.
That's my non-professional financial advisor advice.
We should say we're not financial advisors.
Yeah,
So
put the asterisks in this description, Robbie. All right. Thanks, Shehri. We'll
thanks
talk
so much
next
for
week.
having me.
Yeah.
Thank you so much for watching the Real Estate Podcast. I hope you got a bunch of helpful tips on investing ideas in real estate and in the stock market. Feel free to subscribe and follow us if you want more helpful insight just like this one. See you guys next time.